Welcome to Live the Dream with yours truly, Marty Kaiser. Buckle up and let's get started. Happy Friday, everyone. Marty Kaiser here. This will be our latest episode of the Real Estate Tidbits podcast. Hope everyone's having a great week. A couple things that I've been reading about lately that I thought may be of interest. Good and bad news for Floridians. The bad news is that a lot of big investment groups, hedge funds and related, we're talking about multi-million-dollar investment groups, are steering their institutional clients away from different segments of Florida. Why are they doing that? Believe it or not, it's all climate related. The long-term climate forecasts are not very favorable, especially for coastline properties. So a lot of these investment groups that kind of go into their investments, for long periods of time, not looking to flip things, they're looking at the long-term implications of two things. Not only the climate projections, which is, if you've lived in Florida the last 4 or 5 years, you've seen the storms have gotten increasingly more frequent and they've caused more damage. But they've been primarily on the coastlines, specifically in southwest Florida. And ultimately, they will be hitting the Miami coastlines too, but the last few years have been more on the southwest or the Gulf Coast area. And so what that's done is it's caused a lot more damage, but the real problem is the cost of insurance. The cost of insurance is rising at large levels and is just going to continue to get worse. The other thing that's contributing to kind of steering people away from those areas from a long-term standpoint is that so far our leadership in Florida has been null and void on this issue. You've probably heard me over the past 6 to 8 months when I talk about different things relating to real estate, bemoan the fact that we have a lack of leadership in Florida and they really haven't addressed the insurance crisis at all. On every transaction that we participate in, one of the first things we look at is to make sure we can get insurance for the homes and try to find our customers affordable insurance. Some of the issues we just run into on a local level, of course, if the roof's beyond a certain age, the water heater and things of that nature, those are issues that need to be addressed, but we can overcome them. We just want to allow enough time to make sure that they don't delay closings. But the premiums have gone way up. As I mentioned on an earlier broadcast that I had, my personal insurance went way up and I had plenty of time to shop for it. But in order to get coverage from what I thought was a reputable carrier with decent coverage, my cost went way up. And that was because my carrier, Farmers Insurance, pulled out of the state of Florida. So these investment entities are trying to route their investors to find not only what's an area that's going to give them the greatest return on investment, but what's going to be the lowest risk standpoint, especially when you take into account insurance and building longevity and safety and things of that nature. The good news is Orlando has pretty much been unaffected by that. Central Florida, fortunately for those of us that live in the area and that do business here, is that we don't get direct hits typically from hurricanes. Not to say we couldn't, but reasonably speaking, the negative effects that we've gotten from the storms have not been that great. And so it hasn't affected the investment group strategies and potential purchasers from not investing in Central Florida. So that's great news. Now, interestingly, too, on an area that indirectly relates to this, a lot of the New York firms that previously had been having their multi-million and billion-dollar clients go heavily into the commercial entities in New York from an investment standpoint, because obviously New York City is the hub of not only real estate, but just a lot of investments. they're actually starting to reroute a lot of their investors. And what I mean by that is, while the real estate market is still at high price levels in New York area, they're having them dispose of a lot of their holdings and reroute it, believe it or not, to areas of the country in the Midwest or the Mideast, like Ohio, Indiana, states in that geographic region. Why are they doing that? First and foremost is it's climate related. They've done their long-term forecast for the next 20 to 50 years, and they've seen that the forecast for those parts of the United States is far less negative than other parts of the country. And why they're pulling them out of New York, even though you don't think of New York in the same frame of reference that you would in California or Florida, they're rerouting out of there because the forecast in New York over the next 20 plus years have a lot of it be having major flood problems and a lot of it being underwater, believe it or not. And again, even though these things are talked about, and most scientists, I think, are pretty universal in their opinions, there's really not a lot of preventative things that are being done, because obviously the cost of these preventative things are huge. And in order to somewhat protect these buildings, they're going to have to change the way they're built and use materials that are much stronger and able to withstand a lot of this. And the cost for those things are going to be significantly higher. And it's kind of been, unfortunately, something that our country's been in for the last 40 years, and that's kick the can down the road. None of our politicians, for the most part, want to address these issues, and they just try to either discredit the scientific information or just not address it. When you think about a lot of the things that people complain about in this country, probably first and foremost, especially when you look at this last election's results, were immigration. And then obviously what's been in the news in the past year, especially highlighted by the California wildfires, has been climate issues. But getting back to immigration, we've had an admittedly big immigration problem for 40 plus years. You might have your own opinion as to who's handled it better, but nonetheless, it's been a major problem. Our immigration prevention has been dramatically understaffed. There hasn't been enough money put into it. The technology is still lacking to a large degree. And regardless of what's done, the United States is still an area that a lot of people want to move to because there's more and more oppressive regimes, whether they're warlords, whether they're dictators, whether they're so socialist, that it's hard for people to exist in these countries, both from a financial standpoint and because a lot of these other countries have a lot of gang problems, drug wars, and different things like that. People are trying to seek refuge. And obviously the United States, in spite of the issues that we have here, is still one of the areas that people like coming to. And I'm not saying anything new here, but we've been having issues for 40 years, but nobody wants to address the issues on a change level that really is going to do something substantial and not just do these Band-Aid solutions or not maybe cut the flow of illegal folks into the country for 6 months, but have a permanent way to effectively manage it. And the reason that we don't is because the politicians of both parties know that it's not a popular issue, that it's not a simple issue by any means to try to get a handle on. So instead of doing what's prudent and going to benefit the country, they just omit it. And recently, over the last few years, it's been a big political tool because one of the parties has more effectively used this as a propaganda piece to discredit the other political party. But nonetheless, both political parties have done a horrendous job with this. But there doesn't seem to be any end in sight with that. So a lot of these real estate multi-million and billion-dollar funds, they're starting to advise their clients accordingly due to all these different factors that they know that our politicians are just doing an ineffectual job with. On the local front, as I mentioned last week, we're starting to see an increase in inventory. I believe that trend will be more pronounced as we get into the spring, especially the spring season and some in the summer. What you're seeing selling right now, the houses that are really what I would call quality homes that have a lot of the features that people are seeking, that are in popular areas, that are supported by schools that people want to place their children in, that have houses that are updated, that don't have older roofs, that in many cases have nicer lot locations, whether it's a bigger lot or more privacy in the back, features of that nature. Those houses are still highly in demand, and they're selling for very good prices, and they're still selling pretty rapidly. So for folks that have those houses, it's a great time to sell and move on to your next property. For the houses that are more what I would call mundane, meaning that, there's nothing wrong with them, but they may not have been updated for a while. They may have an older roof. They may not have a very good view in the back. Typical things that a lot of houses have. When real estate was booming a couple years ago, those houses were still selling quickly and getting premiums. But now they're starting to definitely sit, and you're seeing a lot more price adjustments by sellers, because a lot of sellers initially wanted to feel that things were like they were a couple years ago and not really looking at how things are today. And so the time on the market for those properties has definitely increased. And as time goes on, if these trends continue, you're going to see an increase in inventory, which is a good thing, but at the same time, we're not seeing the increase in buyer activity. So what that is trending to show is that buyers are going to be in a more advantageous position. And I really don't think we're going to see any significant changes in that until we see some significant changes in the interest rates. And the interest rates right now are staying high. And in the short term, it doesn't seem like they're going to be adjusting anywhere. I know there's a lot of consternation, as I've mentioned, about a combination of a slower economy or the R word, which nobody likes mentioning, recession, along with inflation. And I guess it just came out in the newspapers today that these tariffs that were delayed briefly with our allies, such as the UK and Canada and Mexico, according to what the reports were today, those changes are going to go into effect March 4th. So we're only talking about a week from now. And supposedly those increase in tariffs are going to be in the 20 to 25% range, which is a large increase. And that nothing else can happen but an increase in prices to consumers, because if you're in business and your cost of supplies go up 20 or 25%, most business people are not going to absorb that and take a lower profit margin. What they're going to do is increase their prices and pass that on to consumers. So only one of two things can happen when that happens. Either prices go up or people hold off buying, and that's where you get the combination of a recession and inflation. So that's kind of scary, and that's why a lot of the economists are not in favor of a lot of these higher tariffs. But nonetheless, I think we're going to see those. We've had a very aggressive new administration come in with some policies that really have not been seen in modern business in the U.S. So it remains to be seen if these policies keep occurring and what kind of impact that has on our economy and our quality of life. And that's not anything revolutionary that I'm saying, but I think it's things that people need to be aware of. And we'll see what happens. I think on a real estate level, fortunately for us, Florida, especially Central Florida, is a very popular destination. And so even though some of these factors that I mentioned are going to slow down the growth in real estate, I think our real estate market should hold its own for the foreseeable future. So that's all for today. If you'd like to get a real estate assessment, whether you're thinking of placing your home on the market, maybe want to draw some equity out of it for a home improvement, maybe you're thinking of purchasing a new residence for you and your family, or you want to increase your investment portfolio and want to know about the best ways to strategically go about that, please feel free to contact me. Again, this is Marty Kaiser. I can be reached at 407-595-9700, or you can email me at marty@floridasells.com. Stay safe, enjoy the weekend, and we'll talk to you soon. This is Marty Kaiser out.